What's going on, guys? Welcome on in. It is a nice casual Thursday afternoon, April 28th, 2022. And boy, do we have some earnings to dive into here in the next half hour to 45 minutes. We're about to get into Apple and Amazon's earnings report here going forward. Now, the biggest thing for this is that reason why we're talking about this stuff is because Apple's got a 6.8% weight in the S&P and Amazon's got a 3.5 almost. So we are talking about two very, very influential stocks here for the S&P 500, for the NASDAQ, that this is going to be a major earnings report. I do want to also pull up really quickly to actually find that calendar. Actually, let's just jump into this really quick too. A couple things I want to touch on first before we dive into stuff, before we start kind of seeing the charts and seeing stuff. This was this morning. There was the Aai survey came out. So here it is. Here's the actual like raw data, or I guess the chart to make it visually appealing to you. So what direction do Aai members feel the stock market will be in the next 6 months? And we had over 59% bearish, we had 24% neutral, and 16% bullish. So the biggest shift over the past week was we see less bulls, we see less neutral, way more bearish. So we didn't go from people being bearish to neutral or people being bullish neutral. It was very, very much so of a lot of bulls and neutral turned bears, right? Now, I bring that up because I want to show you this chart right here. It's actually pretty cool. It kind of shows you the survey, okay? This is showing you the net bullishness, okay? And you see that it's negative. And we are down to a point that we have not seen. You have to go back to early 2019, actually the first quarter of 2009, not 19, 2009, to see a level lower in terms of optimism or pessimism, I guess, if you want to say that, or net bullishness is the official, classification, net bullishness. You'll have to go back to see a worse number, meaning a bit more bearish number, back into early 2009. Now, I was like, okay, let's check out what happened in 2009. Let's see what the charts show on the S&P. So pulled that up. And what I did was I found that if you go back to the first quarter of 2009, the market did not look good. We actually dumped for a couple of weeks. This is a weekly chart, by the way. But we bottomed in early March of 2009, first quarter. We bottomed. The bottom was in on the. This is SPY, by the way. This is SPY. SPY was at 53.99 back in March 2009. And then what ended up happening was the run that we then saw on SPY, the S&P, into the end of the year was over 60%. Nuts. Now, obviously, there's a massive pullback prior to the lows that were put in there too. So yes, fair enough, but a very big reversal. Just something to think about. So I was like, that's pretty interesting to see. And that lines up with some of the most, bearishness that we've seen. And when it comes down to this, day to day doesn't matter. You might look right now and say, oh my gosh, look at SPY, we're up almost 3%. Cool. Day to day to me doesn't really matter here. It's like week to week, month to month. This is big picture. We're talking, when you go back to 2009, you're not going back, 6 weeks ago, last month. You're going back a decade plus. These types of things play out over time. So it's something that you can't really judge based on this. Especially, okay, even when we bounce today, great, cool, sure. But if we end up dumping back off after the earnings this afternoon and then into next week, and we hit new lows, it's all doesn't matter, So that's something to think about. But I wanted to mention that first so people can see that and we can dive into things from there. But here's SPY. I got the 15-minute chart pulled up. Look at these higher lows. We had these higher lows past couple of days, I guess, establishing from the earnings reaction after Google and Microsoft came in and we saw a dump. And then from there, that was the low. 413 was the low on SPY that we hit in the after hours on that day. And right now we hit a high of 429.64, which is actually, I believe, going back, that is the high of the week. Yeah, that's the high of the week. We just hit a new high for the week on the S&P. If you take a look at the weekly chart here on SPY, the weekly chart is turning green, and actually it's a very bullish candle on the weekly if this ends up holding up the next couple of days. So we'll see, but that's what we're looking at there. We pretty much bounced at the exact same spot that we bounced in early March of this year, right there. Didn't come as low, but pretty well. I guess technically we did. We actually did in the after hours. right down to the same exact spot pretty much of the March lows, but that's where we've bounced so far. And looks like we probably are going to see some areas of resistance as we keep pushing higher, if we do. And obviously Apple, Amazon will have a big part in that. Up here probably towards 435 is our spot to watch. That was kind of the lows, the support level of this consolidation chop, but 2 weeks ago, week and a half ago. 50 SMA will be up here towards 437 as well. So those are some spots to watch going forward up to the upside. But it's an interesting day. If you take a look at the 5-minute chart here today on SPY, it's quite, there was a span of time where, look at these 5-minute candles from, it looks like just after lunch, afternoon, all the way to, for about an hour long, from, about 12:15 to about 1:15, we saw 5-minute that string of 5-minute candles, whatever that's like, however many candles that is, all green. So pretty nuts. And then, from there, just kind of slowly chopping up. It seems like this has that look of kind of a slow, short squeeze in a sense. I don't know. We'll see how this plays out, but this is what we're looking at into today. I think there's going to be a little bit of a panic. I wouldn't be surprised. 4:30 area, I wouldn't be surprised if we get, the next half hour, a decent little pull, a sell-off into the earnings. Why wouldn't we? Because, there's some more fear, let's be honest, about going into these earnings. So that's just something to think about. I wouldn't be surprised if we do pull back down a little bit going into the next half hour into the earnings. And then once we get the earnings, we'll get a lot more clarity on what to think and what to be watching going forward. So let me go pull up that earnings calendar, and then we're good to go, just so we can visualize what stocks are reporting and all that stuff, because it will be cool to see, make sure we have a good visual on this stuff. So we got Apple, Amazon, Roku, Intel, Robinhood. Yeah, those are going to be big. These are the big ones. Apple, Amazon, obviously, but Roku could be a big mover. Intel, and then Robinhood too could be a big mover. So there should be some good stuff coming out of this next hour or so of the stream. So I'm excited for it. Hope everyone else is too. Look at some of this stuff. SOXL. Jeez. This is the 3X ETF for semiconductors. This thing is up 18% right now. It's wild. But again, right, Nasdaq's up 3.5% almost, and that's what we're kind of seeing, a big time bounce. 10 years at 2.85 roughly, so it kind of popped a little bit up off of the Monday, Tuesday time frame. Oil did also pop today too. It's up 3.5% roughly. 105. This is kind of a key spot. I'm looking for 105 to see what happens here. If we break 105, 110 is the next spot to watch in terms of oil. But 105 is kind of my zone of okay, if the current pattern of higher lows or lower highs continues, I would imagine 105 or 105 should act as an area of resistance. Obviously, give or take, about $1 or so, but that's kind of the level I've been watching. Bigger news out today as well. Look at this. U.S. economic growth rate unexpectedly declined in the first quarter by 1.4%. The reason why this is actually huge is because they were expecting a rough 1% gain for the quarter. Now, that came nowhere. That's a pretty substantial miss in terms of expectations. Now, the reason why I want to mention that is because if the U.S. economy is declining, right? If GDP is declining, that's going to put potential pressure on the Fed to not want to raise as fast. If these numbers came in, U.S. kind of was, we saw a gain or whatever of 1%. Okay, fine. The Fed's still in line with the expectations. This, I feel like, is starting to kind of turn a little bit away from the expectations of the Fed, which many people do believe that this was going to be a potential limiting factor as to the Fed actually getting off as many rate hikes as they wanted to, or the size of the hikes as they want to. I don't know, and I don't think this is going to affect the next hike. I think that next hike will be about a 50 basis point hike. But beyond that, if this trend continues, this is going to be something that's very, very interesting to watch, because it's a fine line. The Fed is kind of what they've been saying. They don't care about the stock market, whatever. So the stock market will do what they want to do. But at the end of the day, if the economy is slowing, it's going to be more difficult to raise rates at an aggressive pace. It just is. So you're now, again, walking a very fine line, mentioning now oil pushing up. So that's going to have an upward pressure if oil keeps going on inflation. So you kind of can see that it's not an easy decision. It's not as simple as people may think when it comes to just raise rates as fast as you can now, or raise rates now a bunch and then just get it over with. If that happens, there's going to be a lot of downstream effects that you really don't realize right now on the surface that will play into things. So this is going to be kind of crucial to watch going forward. And it's, to be honest, something that I was somewhat expecting. I wouldn't have been surprised. And here we go, right? We got that. All right. Let's see. Outside of that, what else we got? The VIX is down under 30. So we'll see if the VIX pop back over 30. I really don't think the VIX is going to have a lot of give until this Apple Amazon gets out of the way. That's going to be the key. Once that's out the way, next week, there's a lot less of an impact going into next week. There'll be some bigger movers for sure. There'll be some wild swings. I'm sure there'll be some crazy stocks that go up, down, left, right, whatever. But at the end of the day, this is going to come down if and only if the market can absorb this earnings report in a decent fashion. And there's that pullback we were just mentioning, because we're kind of looking at this saying to stuff, into the close here, I think this could be a really good time for those day trade, whatever, or hedges. Just take some profits on whatever, because you don't know what's going to happen with these earnings. Again, it's interesting how with the market ripping just so fast back to the upside, you see how fast people start feeling good about things. And then you forget to yourself, wait a second. We got some massive earnings coming up this afternoon. It might be a better opportunity to wait for that to come out. So that's what we're going to see. Screw my stocks call. Well, that is the psychology at play. I mean, this morning I was looking at XBI and I was like, I can't believe that the S&P, you're going to tell me the S&P 500 is green by 0.5%, whatever it is, and XBI is down 4.5%. I couldn't believe it. I was like, this is nuts, as it's already been hit massively the past couple of weeks. But look at that massive reversal. So these are the times, we kind of joke, but if you buy on times like that, when you feel like closing out of positions, closing the portfolio, moving on, and just saying I'm done, those are the times, generally speaking, that you want to be buying a call, go out a month or two, buy a call, and for the most part, you'll see that ends up playing into your favor many, many times. Obviously, within reason, within risk tolerance or risk reward that you're willing to take. Like if you want to spend $100 on a SPY call because you're freaking out, because your past experiences have told you that generally these times when I'm freaking out are the times to buy. You buy a SPY call for $100, and if it doesn't work out, you lose $100. Or if it works out, that 100 can turn into $500 or $300 because you're getting some crazy volatility, depending upon what you bought. So I know my SPY calls. I have, let's see, what do I got on SPY? I have some SPY calls out to June. They're up a good chunk today. I have some June 17th. Let me pull them up here. June 17th SPY 460s, I believe. Yes, here's my position. I have 5 of these guys. I had an average at 145. They're currently going for $2. So it's not 100% yet, but it's up there. My plan was to add additionally up to 5 more to get 10 total on these. That was the plan on a further SPY flush. But I didn't want to do so until this Apple Amazon stuff gets out of the way. If it goes and the Apple Amazon kind of comes out and we say green tomorrow and everything is fine, then great. I won't add to it. I'll just sell them. I'll start selling at 100% plus, and then they're out to June, so I got plenty of time on that. That's the plan, and then we'll just stop out on the break even if it does go from here. But yeah, that's how it kind of goes. Just, unfortunately for a lot of people. But the biggest problem is that, you want to give yourself time. So for a lot of option stuff this week, because of some of these polls, which, looking back, could you see some, are we seeing some good reversals and some big reversals right now? Sure. But what I was doing this week is the biggest thing I was doing was realizing some L's on some certain contracts, but then just getting myself time. So I got some much more time on the SOXLs. I bought November's now, so I have November SOXL calls. So, they got plenty of time, let things play out and see how this reacts. But you see how strong of a bounce you saw today already. How this thing can move in a big fashion. But we have yet to get continuation. So we've had these little, 1 day ups and then, 3 days down type of things. We'll see if we get continuation. That's what I want to see for some of these things. But I bought those. Out to November. I have Labu now, which is the 3X ETF for biotechs. I rolled my strikes. I rolled them down. So I now have, I think, a $10 strike, and I have those contracts out to next year. And then I have a $15 strike, kind of the more riskier contracts, $15 strike, and those go out to September. So that's what I did personally on those. Just to give myself time and bring the strikes down to a more reasonable spot so that we have a better chance of going in the money sooner, which is going to start making the contracts work for you a lot faster. The delta kind of picks up, and that's what it's all about. So that's what I did personally. I was looking, my next move I want to do is Mesa. This is the airline small cap play. I like this one a lot if the market bounces and sustains. This thing is just in a massive, nasty downtrend. I don't want to say for no reason. There are reasons, but it's getting down to a point where it's starting to get to levels we haven't seen since the post-pandemic era, which I think is absolutely ridiculous for airlines. So we'll see how this plays out. I believe they have earnings coming up at some point relatively soon, next couple of weeks. So we'll check in on those, but I'm not really too worried about that at the end of the day. What I want to do is I have options on these out to July. I do want to roll these out to October. So I'm trying to get some filled, but there's so low volume, so it is tough. But I'm trying to go out to October, $5 calls as like, I don't want to say a lottery ticket, but a $5 call play going for 20 cents by 40 cents today. If you can grab these for 30 cents out to October, your break even is Mesa at, $5, $5.30. Not to, harp on this play, but I think we can see a legitimate balance at some point. This thing has gone on some crazy runs in the past off of some of these moves. If the airlines stay warm and stay hot, this can bounce up to $7. I think pretty easily gap to fill up here towards 650. So that's what I'm looking at, and we'll see. That's my next roller. You got to roll those contracts out. That's what I want to do. We'll see if I get a chance. It's just tough if the volume is super low. So you need a couple green days, I think, to kind of pick things back up. We'll see. But what is going on? Costco, Beast. Let's take a look at Costco. Where is it at? 562. Yeah, it dipped to the 50 SMA and held that so far. It had a nice, double top pretty much right here up around the 610-ish area. And then it seems like that was where that thing got hit. But we get rid of these drawings and we can just reset that chart so it looks nice and clean. But yeah, holding the 50 SMA for now. Which position am I for 6 months? I'm 100% bullish right now. Like, I want to say 100%. I mean, like, the portfolio has no hedges on right now. That's just, it's all long. Now, of course, there will be pullbacks. From everything I have seen, could I be totally wrong? Could we be wrong? And could we have a situation that's like an outlier event, historically? Yes, 100%. But from everything that I am seeing, all the data that I am seeing, the next 6 months, I am extremely bullish. After that, who knows? I have no idea. And also, next week, I have no idea. I don't care. But I'm very, very bullish in the next 6 months. We'll see based on all the data that I've been looking at. We'll see if it plays out. This portfolio, by the way, the Webull portfolio is extremely high risk. So we're talking about, this morning today, I was looking at it. It was down. I think I was looking at this morning, which is not good to look at the total value of it. Just look at your positions, manage them, how you feel, whatever. The value of the portfolio was down, I think, today alone, maybe the past 2 days. I forget what it was down a large amount, percentage-wise. I think it was down over like 10, 12% in today alone or yesterday alone, which then bounced back. It's now green today. So, but I did buy a little bit of Labu calls, which did bounce when it was down to 4%. So that was I don't want to say luck, but I was like, I'm just going to be, my mind is telling me that this sucks and I hate looking at it. So what that tells me, or what my past experience tells me to do, is buy a call. I bought a couple, and they've bounced obviously, but I'm not day trading it. So I bought 6+ months out time, across those roughly. So that's the plan. Let's see. It is nuts. Insane day. XBI. Those are wild. XBI. I was looking at, and then I was saying, do you really like this? This has the look of the capitulation move. I mean, look at this massive wick down that was then bought up, and if we finish green today, that will be even if we don't, it's very, very telling of this move. XBI was looking at the big picture. This is an ETF for the biotech sector. It's not an ETF for it's not a stock, that had a bad earnings. It's like a collection of a ton of stocks, which these generally don't do as well in terms of upside, but they don't do as bad in terms of downside. Whereas you can have like a Netflix that drops, or a T-Doc, a Teladoc that drops 50% in a day. Like, you're not going to get that on this. But big picture, some of these lows, the pandemic lows, we saw it down to about $63. We came down to today around 73, just under that. We went back in 2019, early 2019, when things got really, really nasty. This thing came down to 64 and then bounced substantially. Back in 2016, you're back at a point that XBI was trading at. If you just draw the line straight across, and obviously it was there kind of yesterday too. But we were trading at this price in 2015. In early 2015, XBI was trading at $75 a share. Nuts, nuts considering everything that's happened over the past, 7 years now, right? It's been 7 years since then. 7 years ago, like that's nuts in my opinion. So this dip, and just looking back at the historical charts, this dip does look very, very interesting to me. And so as long as you get time on it, I think it'll be fine. But that's what I was looking at. Wild stuff. Cut my June SPY too early, left some. The biggest thing I think people have to understand too with this is if you are buying the dip on times like this, it's very it's freaky, because it's not like, I'll cut it at this I'll cut it right here. It'll be easy. I'll just cut the risk reward here. Because you're going to be in a situation where you're going to have wild swings. So I don't think we're out of the woods just yet until tomorrow. We'll see what tomorrow brings and what the earnings today bring. But you're going to be, one day you're up, one day you're down huge. So Monday afternoon, you're looking at, hey, we're at 428, nice little reversal off the 420, looking really good. And then 24 hours later, from 428, SPY's at 413. The fluctuations that you see at the bottoms and the top are massive. These are huge spikes. These are huge dips across a lot of stocks, across the overall market and stuff. This is when things they speed up in a big way, because you have a lot more volume. A lot of people are freaking out. A lot of people are nervous. A lot of people are using their emotions to trade. And so then you also have people with big money coming in and just, with size and buying these dips and buying opportunities on select things and across whatever. But that's the deal. So you have much more volatility, especially when you get down to things getting really, really nasty, and especially when you have sentiment this bearish. I mean, if you go back to this, when sentiment is this bearish, everyone wants to buy puts, everyone wants to freak out, everyone wants to panic sell, and there's the next person every day. There's a couple of people saying, well, you know what? I've watched my stocks go down the past 2 weeks. Today's the day I'm gonna market sell them all at the open, and that's kind of, you get a lot more volatility at these times. But again, just make sure people understand that if you're day trading or swing trading, it's a different story. Like if your time frame on stuff is like short term, like week, 2 weeks, then this is a very difficult time to trade. But if you're going to play things, if you're going to take advantage or look for a bigger move out for like 6 months, 6 months, whatever the time frame is, who knows, a year. These are opportunities that you can just buy, walk away, and stop, or if you want to sell, walk away, and then wait till things kind of even out. Wait till the earnings are over, and then come back and check things out and play momentum when the momentum's back. But for now, it's just chop city. All right, can easily get you broke. The thing is that it can easily turn you broke. Good thing a full-time job. That's the reality is too. It's always key. It's always key. There's the biggest thing for me. There obviously are swing traders who just swing trade, and that's their job, and they don't have a full-time job, and they've done things. But for the most part, you're either if you're a day trader and your income only comes from trading and investments. Obviously, you can cash flow dividends and whatever. I guess technically you can kind of make money from that too. The bigger your portfolio, the more that'll actually be meaningful. If that's what you are. Well, not if that's what you are. The reality is that those are the people that are actually able to do this full time, because they can come to the market day by day, clean slate. Like when you try to trade around big picture trades or swings, or you're gonna chop yourself up, and there's a very, very high chance that you're going to be very, very emotional based on your account, based on the number on your account, and then you're gonna make a decision that's ultimately gonna end up screwing it. That you're gonna look back and kick yourself for. So the way I see it is like there's day traders who can actually, and even that said, there's not many that actually are profitable that can do it profitably for a long period of time or consistently. But there's that. If you're actually going to if that's your income, you need to be more of a day trader, in my opinion. And if you are, you can make a lot of money off of bigger swings and bigger picture investment or bigger picture swing trades or investments, but that needs to be patient, and you can't rely on that month to month to pay the bills by any means, because again, war could happen. The Fed could do something, like things could change, which alter a lot of different things. And all of a sudden things speed up, things slow down. And now, your trade that you were looking for this to play out over the next 6 days, now takes a month and it ends up working out. But if you need the cash tomorrow to pay the bills, like that's going to get you into a lot of trouble. So that's just, you don't want to go down that road. Either you have a ton of money and you're cash flowing from dividends, selling covered calls, and that's enough to pay the bills. And that's how you can go full time, which you need a large account to do that safely, I would say. Or you're someone who's much more of a day trader and is getting in and out, clean slate every single day, is able to withdraw, day by day or week by week from their portfolio because of the active income that they're actually creating or generating off that. Realistically, if you wanted to go full time doing that. So it's something you got to think about and just understand at the end of the day. Any opinion about NVIDIA? Let's take a look. NVDA. They have earnings next. They don't have earnings for a little bit, if I'm not mistaken. Let's see. NVDA, massive move. We had some levels charted out here the past couple of days. Yeah, we had this 178 was our support. We didn't get, and we had these 3 zones charted out, which were the lows back in 2021 summer. So these were our spots we charted out. And we were thinking to ourselves, okay, these could be some spots to watch. And it actually, it didn't go all the way down to our bottom zone, but it came pretty close. Came within about $5. But yeah, this is the reversal spot. So we'll see if it falls below 178, then yeah, it looks like obviously the downtrend will continue. But for now, you're trying to reverse. This thing is going to have some nice moves up. If we get some continuation on the market, you have 2 gaps. I think this could fill those gaps in a very short period of time. One gap right here to 230. The next gap here to 260. Those are the 2 targets. If you had either shares or calls, whatever you're doing, and they were, big picture, let's say they're calls that had, a couple months of expiration on them, whatever, I'd be looking to take profits at those zones. And potentially, if you're looking to cut the loss, cut it under that 178, maybe 2 consecutive days under 178, cut it. That's how I'd be looking to potentially play that. It's tough too, because sometimes you'll have a situation where like this is a stock that you want to hold long term and you feel really good about it. And if the market goes up, you feel like this is going to go up. But it's like you got to sometimes, it depends what your plan is. If you're going to have an expiration, a date on an option contract that expires, you got to stick to a risk management strategy. Like you got to stick to, okay, if it falls below here, I'm going to get out. Stick to that because it's very easy to just let things bleed. But if it's a long-term investment and you're buying shares, then this is something to buy here. It just historically it's been a good spot support wise. And then if you're willing to take profits on that because it made a nice gain in a relatively short period of time, let's just say you bought 10 shares, maybe take, 2 shares off here, 2 shares off here. Now you got 6 shares and you can let the 6 shares hold for, ride for the longer term or whatever. Those are just 2 spots to maybe free up some cash and lock in some gains if we do get those spots in the next couple of weeks. Something to think about. Here's SPY coming in. So look, there's the pullback. It makes sense. I'm not surprised that we're getting it. But yeah, there's a pullback going into the end of the day. So I think that's going to be, makes sense going into the earnings. People are freaking out, not really sure what to expect. Apparently, Apple's reporting at 4:30 and Amazon's at 4. So we're going to get Amazon first, and then it looks like Apple will come in after that. I believe Apple is planning. I saw some rumors. I believe Apple is. Let me pull up another Twitter. Look at this. I was looking at some Cathie Wood stuff. Some of her. We can look at this in a second too. Some of her biggest positions. I thought it was hilarious. Let's see. Let me pull up another Twitter window and let's just pull up. This is what I posted this morning. It's hilarious. It's funny because this ends up being the bottom potentially. Potentially, we'll see if it is, but that potentially could be the bottom. So Apple was pricing in about a $7.80 move based on the options. Amazon's pricing in about a $174 move. Let's just do the math on what those are actually looking at. So let's look at those 2 stocks, see what they're setting up. And Amazon will be first, it seems like, in terms of their timing, and then Apple. So we had some of these spots drawn in. I'm going to get, we can hold that inverse head and shoulders on Amazon, by the way, is potentially holding up. So they're pricing at about a $175 move on Amazon, meaning if you buy calls right now with tomorrow expiration, you need this stock to go, wow, that's a pretty big move. You need this thing to essentially hit the 50 SMA, which would be up here towards about 3,050. 3055 3055 is where you need Amazon to go to make money on calls, or more, really, ideally more. And then you would need this thing on puts. You'd need this thing to drop below 2,700. So those are the two spots to watch on that. Pretty big moves. Actually, what were the percentages on those moves, by the way? Let me just see. Let's see. That's about a 6% move on Amazon. Pretty much pricing at about a 6% move, which is a lot. I guess, maybe it's not as influential as like an Aapl in terms of the overall weight. Apple's pricing at about, let's just say, an $8 move on the option chain. So Apple's pricing at $8, which means Apple needs to go over 172 essentially for you to make money on calls, and it needs to drop below this trend line down under 155 for you to make money on puts. Apple's got about a 5%, pricing about a 5% move by the earnings. So that's that. All right, let's see. Boom, boom, boom. Let's see. Good evening. Good evening. What is going on? It's actually, it's 3 p.m. for me. It's still afternoon. I don't need to rush into the evening just yet. Although it's been nice sunset. At least here, sunsets after 8 now, which has been it's been nice to see. All right. I know it's the main rule of diversification, but if you had to put your money in one stock, would you choose? No, yeah. To be honest, if I had to put my money in one stock right now, based on what we've been seeing, it would be XBI. Now, it's not a good play, necessarily right now for the reversal of immediately. Because if the market stays the way it's been, this will definitely have some significant downside. But in my opinion, it's a pretty good risk reward. It's an ETF. You're diversified across the ETF, by default. So that's good. And this has a really nice upside move. I'm looking at this thing for a bounce to get back up to at least 106, back when it starts to kind of gain some steam again. It's about a 40% move. It's in my view, from where it's at right now, it's a really darn good risk reward. That's just how I see it. Individual stocks with earnings these days, it's risky. It's tough because you can buy an individual stock that you think is down a lot, but if they have earnings and market's like, no, screw you, they think a dump and you could be down bad. So at least you're not going to have that situation with XBI. So I like that. I do also like the SMH. This is not as good risk reward in my opinion, but as long as SMH holds 220 or so, this could be amazing for a bounce. But again, bigger picture, it's up a lot. Yeah, it's still up a lot. Eventually, this could eventually break down this head and shoulder inverse. This is a head and shoulders possible look too. Could break down under this 220 or so. But yeah, it's XBI, or you can play individual small caps, I guess, too. NSPR is one that I have individual small cap wise. I do like that one a lot, but I'm just playing for a new spike, and so managing around my position there. But that's that. It as much as it goes against, I think that I have determined the past 6-12 months that going forward, I want to let the market play out. Let's see how this cycle plays out. What happens the next 6 months, maybe 12 months, we'll see. Either, I'll know fairly soon, right or wrong, across my thoughts on what I think is going to happen. But if whatever happens, whatever happens up, down, or whatever, big picture moves, whatever we end up getting, that's the time that I think that I'm going to be really narrowed in. So I'm going to separate portfolios. I think we're going to do the Robinhood portfolio is going to be the covered call portfolio. So we'll put in some money there, and it will be, 1 or 2 stocks at a time. Simple. It's risky because it's 1 or 2 stocks at a time, but very simple. Buying stocks that I want to hold for the next 5 years and just selling covered calls every week or every month on those. And, it'll be a very slow process. It'll be, starting from the ground up, but it'll be very slow, but it'll be really nice to kind of walk through how that works and do that. And I also want to start a dividend portfolio. So I want to do those 2 that we're going to start in the coming months. We'll see in time frame, who knows, letting things play out ideally. And then I'm going to take some out of the Webull, put it into some of those. Whether we got to take money out of the Webull at 15K or 30K or 50K, I don't know, whatever the numbers is, once things play out. The way that I'll know, I'll get a feel for that is if we do reverse and we start bouncing back to the upside in the coming weeks, months, and all of a sudden stuff makes some big moves. There's some nice moves, and all of a sudden I'm starting looking at a lot of stuff, and I'm like, I just don't like the risk reward on this stock or that stock or this sector anymore. Once that's happening, that's when you have heavier cash, and then I'll just be holding the cash for when, a rainy day, essentially. Or you can play some inverse ETFs or let things play out. It'll probably be, I would say, more of a very short-term trade or day trade focus, or even small cap focus, longs and shorts during that span of time. if everything kind of works out that way, in that, I guess, transitional period of time. That period of time, if everything works out or if things work out the way that I somewhat expect, that period of time will be extremely hot for the market if that's how it goes. If we do, and I'm not liking the risk rewards, I would imagine that that's where a lot of retail is going to start jumping back in, get really excited about stocks again, start buying stuff at the tops again. And there will be a good couple weeks, couple months, who knows how long it lasts. Usually it lasts longer than you think, especially the upside will last longer than you think, and the downsides too. You thought the downside was over in March. Well, guess what? We got retested again this past week, and it wasn't over. So just like the upside, the downside will, just like the downside, I guess the upside will last longer than you think. So I'm not going to try to time the top by any means, but it'll be very, very hot. So the short-term trades, the small cap stuff, maybe the meme stocks, who knows? There could be a lot of short squeezes at that time. Could be a really crazy time, and it will be a lot of fun. But it's not time to be looking at positioning myself for the long term realistically at that point. There'll be much better opportunities, as we've seen the market showed us the past 6 to 12 months now. We'll have these opportunities again. There's no rush. So that's that. Opinion on GRNQ. What's to come? Let's take a look. I don't know. We've been looking at this one. Let's see how the chart's looking at GRNQ. It's honestly it's just super quiet. It's just a super quiet bottom low float, small cap here. To be honest, if you want to play this one, play it. And if you want to play we were looking at Grill a couple days ago, I still like Grill. Here's GRNQ. Here's Grill. Sorry, not Chipotle. Sorry, I didn't mean Grill. GRIL. Another one that's really, really nice. We were looking at this thing at 50 cents. We thought this is a decent play. Fundamentally speaking here, they got out till August, I believe. They have until August to get above $1. Either reverse stock split or whatever. I got a bunch of orders just canceled, I guess. Yeah, okay. I had some Mesa orders trying to get out, whatever. I don't think these are bad plays. I really don't. I don't know how much cash they have. I know that they have the NASDAQ listing requirement. They're a Chinese company. Okay, cool, whatever, doesn't matter. They need to get over $1, and I believe they have a couple months to do so from what we looked at. So you got a couple month time frame. It's setting up. It's holding the 50 SMA. It's holding 40 cents. It's fine. In my opinion, there's just patience. These things are going to be a pain because you have to wait on these things sometimes for a long time. Like NSPR, man, let me tell you, I have been waiting on this guy for a long time. Do I have the best average? No, I don't really care though. I'll let things play out. This thing will spike one day, but I'll be just patiently sitting here and waiting for it. The same thing with NVOS. NVOS was a stock that I was in and out of for like a year, roughly speaking. And then it finally went. It went from $1 all the way up to $3.40 or so almost. I mean, massive run. Eventually, these things will have their runs if you're buying the quiet and being patient. You got to be careful. The problem that I've had with doing this is when I start getting myself into 30 different small caps at a time. Pick a couple, have a ton of cash set up to average in if you need to, and relax. Relax. All right, let me jump into earnings. We're going to get a lot of earnings coming through right now. Roku just reported earnings. Let's just start pulling. So I think we're going to get Amazon first. Here's Roku, by the way. Here's a 5-minute chart. Roku is spiking up off the earnings. Initially, guidance seems like they beat on revenue, but we'll jump into the actual numbers in a second. Okay, let's see. Let's jump back over here and refresh this page. Intel came out, I believe. Roku net revenue beats by about 13 million. So there's that. Intel, here's their reaffirming 2022 revenue guidance. Intel's, I guess, another bigger one that we're looking at too. Amazon just report earnings, big pullback. So let's see what Amazon's coming in at. Looks like Amazon missed. Looks like we got a miss for Amazon. Roku beats, so Roku is up for now. We'll come back to that in a second. Amazon's the bigger one we're going to look at. Amazon is working through inflationary supply chain pressures. Oh my, 10% drop on Amazon. That's massive. That's a massive drop. That is going to do it. If you bought puts, if that holds, you're going to be fine on those puts because we're looking at that. It was about $2,700 is the spot to watch for that. That thing is just, look at that. Here's the 4-hour chart. Why is there like a stupid, let me get rid of this. Let me get rid of all that stuff. Delete everything on the chart. Yes. Clean it up. Yep. So we're below the lows of March. We'll see if it holds. It initially spiked down. It's down 9% though. So let's see, give it a second or two and all these numbers are coming out as we speak. All right, let's see. What else is popping off here? Gilead, Amazon working through inflationary supply chain pressures. Yep, kind of knew that. Oh, here it is. Amazon Q1 net sales comes in pretty much where they expected. They see Q2 net sales. Oh, wow, they're guiding lower. They see Q2 net sales down 116 billion to 121 billion versus estimated 125. So that's not good. Amazon Q1 AWS net sales 18.44 billion versus an estimated 18.25 billion. So it looks like they beat on that Q1 AWS net sales. Okay, so let's get their. I want to get their EPS numbers, but it looks like the biggest thing is that Amazon is now guiding lower going forward for next quarter. So that's not looking good. Amazon Q1 loss per share of $7.56 and the estimated EPS of $8.40. If that is accurate, we'll get that shake out. If that is accurate, that is nasty. That is nasty. Let's see where Amazon's sitting now. Let's see. Let me get rid of this. Okay, it's down 9%, 10% in the after hours. Yeah, you're looking at this thing right now. Here's what the chart was setting up as, and you're going to be down below these lows. Now, Amazon's kind of interesting. Look at this chart too. I don't want to say it was a pandemic stock. It's definitely not a pandemic stock, but it did benefit greatly from the pandemic. So now it's down 10% in the after hours. But yeah, this thing had a crazy run from looks like the pandemic lows March from $1,600. This thing ran on and essentially doubled in a span of a couple of months from the March lows. You're not at risk, but you're gonna be coming back down. Looks like into like this zone on Amazon. It's like $2,600, which is like right here. So it's not like you're going down crazy. The 50S or the 200 SMA on the weekly is at 2,500. Nothing crazy, but yeah, we'll see if that 10 holds, that 10% holds. Let's see. All right, that said, I'm going to jump into, I want to make sure we get some, let's see. All right. Here's SPY. Let's look at SPY. How's SPY reacting? Now, the question is going to be, can Apple save it? SPY is not down that much. I mean, SPY is down about 0.4%. It was up 2.5% today alone. SPY is down about 0.4 in the after hours. So we'll see. Looks like Robinhood just reported. We're getting a ton of stuff. Well, let's work through this one by one. Let's go back here. Let's work through this stuff one by one. All right. Robinhood Q1 net interest revenue came in under expectations there. 55 million versus a 65 expected. Robinhood Q1 other revenue came in at 26 million. So Robinhood not looking good. And it makes sense, to be honest with you, because right now, I think the next couple of quarters could be good for Robinhood based on what they've been doing. But you need attention. Like you need crypto and you need the stock market to be hot. If it's not hot and things are going down, then you're going to see Robinhood suffer. That's just simple as that. That's the indicator. The indicator is literally sentiment. If sentiment is so bearish, which we have, what happens? Less people care to trade stocks or even, use the crypto platform. No one cares. So if no one cares, Robinhood's going to suffer. And that's what they're going to deal with. So let's take a look at their chart and see what we got there on Robinhood. Sorry if I'm missing stuff on the chat. I'm just going to jump through some of these things really quick. Robinhood is down 6% here in the after hours. It was up, it pretty much gave back its entirety of today, roughly for now. It was up 6%, now it's down 6%, so it's pretty much gave back the gains. It's sitting around 944, hit a 926 new low on all time today, then hit 909 in the after hours so far. So it looks like Roku. Let me go and change this to the after hours scanner here. Let's go back to Roku really quick. We have Apple coming up in about 20 minutes. So I believe, Roku gave it back too. Roku just gave a ton of it back. They see Q2 revenues. They're guiding lower on Q2 revenues on Roku. Let's take a look at this. Back to the stream. Roku sees Q2 adjusted net EBITDA 0. Estimation was 21 mil. That's not good. Amazon drops 10% as Q2 net sales forecast misses estimate. Roku sees a Q2 net rev of 805 mil versus a 826 expected or estimated. Yeah, okay. So far the reaction from what we're seeing now, Robin is actually bouncing back a little bit. The reaction from what we're seeing now is that it doesn't seem like the market likes these outlooks going forward. So it looks like Roku missed EPS by like 1% and revenue. So Roku beat on revenue, but it missed on EPS, it looks like. And they're guiding lower for next quarter. So, not like terrible to be honest. Like that type of earnings on Roku, maybe it ends up being a nothing burger. Like in reality, on a quieter market, everyone wants to sell. Everyone wants a reason to sell. In a calmer market, this type of move, probably plus or minus 1% or 2%, and no one really cares. We move on and things move on, and that's it. But we'll see. The Dividend cover call portfolio and just do triple and then come wheel. No, that's true. It's not a bad idea too. I could do that. I might do that. Kathy's still down huge. No, remember we were looking at Teladoc yesterday in the after hours. This is nuts. Teladoc is down today. Ended up down 40%. It was down like 50%. Hit $28, and now it closed at 33. Insane. Absolutely insane. Apple's coming out at 4:30 p.m. Numbers for Apple come out at 4:30 p.m. So we'll see. Amazon dumping. Wish about Amazon puts. Yeah, I guess looking back, yeah, it would have been good. But it's tough. It's tough to expect a move of that caliber. And even this move, by the way, right? It's down 10% now. The next 2 hours, as we saw with Microsoft and even as with Google a little bit, this could kind of slowly grind back, and before you know it, tomorrow morning you wake up and those puts are actually worthless because it kind of slowly grinds back and it opens up tomorrow like down 6% instead of down 10%. That difference is going to be killer on the option. So the initial reaction is never always perfect. And what ends up happening too with these situations, if like you wake up tomorrow morning, and another thing to consider is all of a sudden, well, these earnings are out of the way, or let's just say Apple comes in and just kills it right now in earnings. If that happens, I mean, look out for a second. It's going to pull Amazon up a little bit. It's going to pull the market up, and then Amazon might just even though it got hit, it might slowly kind of grind back into the open, pop at the open to make sure that you can't make money on your options, and then end up screwing everybody. I've seen it happen too many times. So let's just look at the Qs. QQQ was up 3.5% today. Well, it just gave back about 1% of that, so it's dropped about 1% so far in the after hours. So far. Earnings here are not great in terms of all these reactions. Amazon, biggest one, down 10%. That's a lot. Really, we're looking at plus or minus 5% for a really meaningful reaction. I wouldn't be too concerned if it was down 5%. Like, who cares? But down 10% is pretty nasty, so it makes it a little more fearful market-wise. And the reality is, right, for those of us who are looking at this and saying, market pulled back at the end of the day, makes sense. I think it makes a lot of sense that to not get overly excited on this move because it was setting up. This move just was setting you up to be disappointed. Like, have a nice green day. Oh, feeling good. Here's a reversal. We're good. And then wait, you got the two biggest, some of the two of the biggest companies reporting earnings, and well, we're about to see how Apple comes in, but Amazon's definitely not helping the case. Again, though, Apple has roughly double the weight of Amazon, so. This is big. If Apple comes in and we get a dump, I wouldn't be surprised if the initial reaction is a dump. You have to pretty much kill it on earnings for that to be good, for that to pop. I would be surprised if the initial reaction is a dump, but I heard some rumors today. I was seeing some rumors that they're going to announce a share buyback, and it could be a substantial one. So we'll see if they do on Apple, and if they do, that could help save them. But my guess is that if they're going to do that, like the Google situation, let's look at Google. It might be in combination or in conjunction with some nasty earnings. So we'll see. Meanwhile, though, Google is pretty much recovered the earnings drop almost all the way. So whatever. It filled the gap. That's a nice little gap to fill. I guess it could have been a good day trade today. Idea. But now we wait 15 minutes for Apple. I'll jump back and let's see if we can find some more. Amazon's still holding up down 10% roughly. So no, it's going to take some time for the reaction to kind of shake through a little bit. Let's just see how it goes. All right, Apple, Amazon, great measure of the consumer. GDP data suggests a slowing economy, not too optimistic. Yeah, it makes sense. No, it makes sense. Love Robinhood brokerage, hate the stock. yeah. Until they make money. Intel didn't do bad for the semis, but it gives you some more time to buy the dip. Remember when a buddy had $3 AMDs? That's insane. All right, Western Digital. Let's just look at some other earnings. First Solar comes in with a bigger loss than expected, and net sales like way underestimation. So FSLR is probably getting rocked. Let's just go see that. So it looks like yesterday was kind of like the day. It was most of the earnings we're looking at were up. FSLR actually not really doing much in the after hours. It dipped, and then it had not too much of a reaction. Lower volume play. I guess no one cares. I mean, I think it's probably down a lot as it is. Let's see. Where is it at? As it is, not really. It's still, I guess, up relative. Not really. I guess it's kind of in between, in a range, in the middle of the range. So it's not like great. I would imagine the thing comes down. We'll see unless there's other guidance there. Apple numbers coming out later. Adjusted EBITDA on Roku. So that wasn't great. Let's look at Roku again. Roku dumped and then it came back. Initially spiked, dumped, and then it came back. Hey, look at Roku. It's flat. So yeah, Roku pretty much flat. Even honestly, flat is pretty good considering it was up 8% today as it is. So it's not too shabby, I would say. Amazon's dumping. Check out OST. Yeah, what happened with OST? I was seeing some of that craziness. OST. Holy sheesh, what happened here? There's got to be some news or something. As a Chinese come, I'm not sure if that really matters, but had to be some news or something on this thing. But that's wild. Down 88%. That is insane. Absolutely nuts. I don't think he held. Oh, man. That's insane. If you had AMD at 3. What is AMD now? No, there definitely will be those situations. Like you have to, if you're a long-term investor, like then stick to your long-term investing strategies. And don't sell a stock after after a year, right? If that's what you are, if you're gonna trade it, like I don't like I when I play small caps, like I look at small caps and like I know that there's there have been many opportunities. I think there was Load was one that was a crazy one. Load came back down though. There was a couple that I've had that ended up being like 1000x type of plays. That I sold for 50%, 100%, whatever the number was at the time of the spike. But I don't care because I was like, I'm playing it for the, for the spike. I'm playing it for the 50% move. I'm playing it for that. That's what I'm playing it for. I'm not playing it for, the 1000%, long-term invest. And that's it. So it just comes down to your strategy. 800% yesterday. Yeah, I guess because it opened up, IPO. It opened up after the IPO and everyone wanted to buy it. Whatever reason. That's how this thing can kind of go. And then it dumped gave it all back essentially and more today, or I guess. So Robinhood, by the way, now is dumped. What is it at? It's down around 9.15 here. It's dumped about 10% in the after hours. So Robinhood's down a good bit. Shopify, I don't think they reported earnings, but they're coming down in a substantial fashion. I think with Amazon, they're really kind of tied to Amazon there. Let's jump over at Amazon again. AMZN. Yeah, Amazon down 10% here in the after hours now. Let's see. I think that it's going to the key is going to be in 15 minutes when we get Apple. When Apple comes out and drops theirs, then it's going to be nuts. Put in $1 in OST for fun. That's nuts. So yep. So the flip of the switch, just kind of like the opposite of yesterday. So yesterday we had a lot of good stuff. A lot of earnings that were pretty good. Facebook, all this, was having a nice little day. Here's Facebook, by the way, or Meta. Sorry, Meta. Some people were, how dare you call it Facebook? This thing, holding up decently still in the after hours. Only down about 1% in the after hours. Finished the day up 17%. So, yep, that's that. So that was a good kind of a good start to the deal there. And then you kind of saw, a lot of stuff was decent. PayPal. What is PayPal at right now? Let's see how PayPal kind of went under the radar, I think, a bit. Actually had an 11% day today. So it had a really good day. But PayPal was kind of like, initially kind of ripped up, and then actually kind of pushed up. Was a little choppy, barely up, and then it really ripped to the second half of the day once the market went going crazy. So kind of interesting to see. I'd imagine the VIX, what's the VIX? Finished at $30 roughly. So the VIX is still elevated. It's right here around $30 where it finished at. It's still up there. Also when it comes to the GDP, I did see this earlier today, which I think is actually a good thing for stocks, believe it or not. Big picture, like overall market, because it's going to make the Fed have to say, we got to pump the brakes on the rate hikes. You have slowing economic growth. You have, negative GDP essentially. And then you want to come in and raise by, 50 basis points, like however many times in a row there, or whatever. I don't think that that's going to work. It's not, I mean, they can do what they want to do. I just highly doubt that that is going to actually happen. So we shall see. But that's my guess, is that is going to start walking back their thought on that. Because now the questions are going to be, wait a second, guys. You were saying all this stuff, inflation this, inflation that. Now if oil comes down, that's the next piece. If oil comes down and, some of the inflation numbers are starting to pull back a bit, we'll see. That's going to probably have to walk them back a bit on the hikes. I still imagine they're not going to stop, at least for now, right? There's no reason to stop, but it's going to make them reconsider, how fast or how aggressive they're going to be, my guess. So we'll see. SPY could fill the impulsive move again. Yeah, it could be another dip tomorrow. We'll see how let's see how Apple's going to be your key. Let's be honest. It's going to be Aapl. Right now, SPY is sitting essentially right on the highs of this morning for pre-market area of resistance. Now that's becoming support. So that's where SPY is sitting right now. This is the S&P ETF. So that's going to be your spot. This is going to have a pretty big reaction off Aapl. Now, here's the thing. It's funny. If Aapl comes in and earnings are bad, you may just end up giving back today's gain, by tomorrow morning. You may just give back today's gain, and then that's it. And then we're back to the square one, and we'll see how the market reacts to come, 420 or 418 or whatever the number was, wherever we closed yesterday. We almost hit 430. Now we're at 425 on SPY, so we give a good bit of that back. But you guys see how fast things can move, especially in this environment right now. Things can bounce around in a massive way in, a very short period of time. Adding long-term somewhere if we come back down. Yes, that's what I have, those SPY calls that I bought Monday. I'm just going to recap this. I bought these SPY calls Monday, and I actually got lucky. I got them sub 420, I believe, when I started buying them. They're June calls out to 460 strikes. So they're, way out there. But that said, I bought them like somewhere in here. And so they were up initially off the move, but I didn't sell that because I bought about a month and a half out. So it wasn't the intention. It was a bigger move up. I'm looking for a move up to like this 440 area to actually say, I'm going to take this off. Then it came back down, could have added to them, didn't do so. Really, I was looking to wait to see how the earnings shook out and stuff. And I thought that based on how things were shaping up that after hours, that we could have a dump the next day, which would have been yesterday, Wednesday. We ended up not getting the dump yesterday. We actually kind of held up decently. And whatever, it is what it is. And then so now at that point, I'm like, okay, going into Thursday, there's no reason to add at my average on these calls. So either we flush or we go. And so I'm leaving room to add in, but I'm also saying to myself saying, if we go from here, fine, I'll just take them off as we go up. If we don't, this could be the opportunity. If Aapl comes in or tomorrow is a really nasty day, this could be the opportunity, right, to add into them for June, buy that flush, and that's what I'm interested in. So we'll see if we get that opportunity. That's just how I'm going to play it on the SPY calls. But it may or may not actually work out. If it doesn't work out, I already have a position, so I'm fine. All right. Penny stocks. I only have two right now. I have VISL and SPR, two that I've been holding for a little bit. That's that. I'm not like, super in the penny stocks. The way I'm feeling for the penny stocks right now, I'm not super looking to be super aggressive on that by any means until the market heats up. When the market heats up for small caps and swings start to work better and stuff starts to play out, then that's when I'll be aggressive on buying penny stocks and buying stuff that at lows. There will be a ton of unfound small caps, unfound penny stocks that no one's looking at, that no one realizes are actually, sitting on this much cash and this and that have all these different catalysts set up. There will be a ton where that came from, even after the first, month of them getting hot again. So for me, it's like there will be so many out there that where that came from. There is a ton to play if the market actually gets hot for them. So it's fine. I have a hold two for now. I'm just keeping it very, very light and just playing basically, essentially looking at a bigger picture market view is what I'm looking at now. Basically, from what all I was seeing, all the data I'm looking at, basically looking at some of the sentiment numbers and looking at past history of times where we've seen sentiment this low. And really, at the end of the day, no matter what, there's bigger picture things that could happen, but no matter what, the market's driven by greed and fear. It's just fear and greed kind of pulling here, pulling there, pulling here, pulling there. That's just the reality of it. And when we get down to certain levels of fear, I see the risk reward is outstanding to the upside. So that's what I'm positioned for. But it's not upside for next week. I'm not sitting here saying, oh, next week I'm gonna try to make money every week. No, it's positioned for the next couple of months, and we'll then reconsider after the next couple of months and how that plays out. And if it's wrong, it's wrong. If it's right, it's right. Make money and then you move on to the next thing. Make the next position. Ideally, what I would love to do is kind of lock in some gains across some of this stuff and have some nice bounces. Lock in some gains, free up some cash. Small caps start to heat up, get a little bit warm. Boom, then we can start swinging some small caps with some more, I guess, I don't want to say more consistency because it's a patience game on some of those swings, but maybe things start heating up there on that front, and it could be a lot more, faster in terms of getting, that cash flow in and out types of moves. Like, we get the move, okay, boom, lock in the gains, move on to the next one, get the move, lock in the gains, or take the loss, move on to the next one. That's it. But when things are like this, it's just tough because there's just no volume on some of these things. It's just they're dead until they're not. They suck until they don't. Is what we got. All right, so SPY actually a little bounce. Let's just go check on Amazon really quick. Apple's coming out in 5 minutes. It makes sense. Look at Amazon. That's why, because Amazon's bouncing. Amazon. So just like we said, you need under 2,700 for if you bought calls or if you bought puts, I guess, for tomorrow. You need Amazon to open up under like 2,700 to break even or to actually make money on that. So just like we said, like see how fast things could change. Like if Amazon just like kind of grinds back up and opens up tomorrow down 5%, still a decent dump, right? But down 5% opening up tomorrow, it's going to end up burning everybody who played any options overnight. So there's something to think about. I'm loving. Oh man. Absolutely shredded in the long term, but I like it. When you come to like getting shredded in half by your portfolio, no, but you gotta laugh sometimes. Like, obviously you can get burned, and the way you get burned is like I don't want to be like say the stupid old same stuff. You only lose when you sell, but it's true. If you're buying short term options, like there's a very high chance you can get burned. You're the king or queen, I guess, right? If you're right in that time frame. If you buy, monthly options for SPY, if I bought SPY, May 20th, right? And SPY bounce, and I happen to buy them at 420 and SPY bounces to 450 by like May 5th or whatever, like next week, I don't know. Yeah, I'm a king because those could go, 100, more than that, 500% type move, depending on which contracts I bought. They could go crazy, if I bought out of the monies, but is that the best for your risk reward? Is that the best? Is that where you want to position yourself in terms of like, do you want to have on those types of plays, you're going to have more losers than winners. And as you can make that work as a strategy, but as long as but for most people mentally, it's so much more draining and it's very difficult to make that work as an actual consistent strategy. So it's not the best recommendation. It's just buy some time. Or buy shares, and who cares? You buy shares and let it play out. You don't have to worry about time decay, which is key. Which is why I do like small caps for that reason, but they're very seasonal. So now, I'm just learning the seasonal patterns and really understanding when it's time, when it's not time. When it's time, you can do very, very well, and it's a lot of fun. Waking up for some, massive gappers off of some news. Those are the best feelings ever. Waking up to a 100% gainer or even a 50%er, it's killer. You wake up and you're like, oh, this is awesome. But there's times when that's hot, and then there's times when that is definitely not. So right now we are in a situation definitely not. I don't scalp options. Right now. I don't day trade much at all. As we speak, I pretty much have I don't want to say like it's the situation is you could say swing trader, but like the current. I will adapt to what I see. So right now, I just don't see. It's very choppy. I guess it would be a really good day trader's market, but I see much more potential upside across being long, specific things or being long in general. Right now, based on everything that I'm seeing sentiment-wise and other, data points that we've talked about, a million times here. But for the most part, I would say Roku is popping. We'll look at Roku in a second, and Apple's coming out in 3 minutes. But for the most part, right now, I'm more of like a medium term, you can say like a medium term investor, at least based on this current portfolio positioning. But I do have a long-term portfolio. I do have the Webull portfolio, and then I have kind of a mess around Robinhood portfolio. That's it. The Weeble portfolio that we have, that we show on Saturdays, we dive into it, is extremely high risk, high reward. It is what it is, and we embrace that. That is it. That's what we do. So it's like, understand, like this week, we'll see how tomorrow ends up. Could be looking disgusting in there. It could be really bad. But just like we saw today or the past 2 days, you have crazy, 10% drawdowns. Like at one point today, I think the portfolio was down 10%, and then it ended up finishing the day up like 5 or 6. So like that is a massive swing on the portfolio. But as if you're willing to stomach that, that's fine. But you just have to understand that that's just the reality of it. So that's the Weeble portfolio. It's positioned for like shorter term generally. But I did move some stuff to like options expiring out to. I think I have some Novembers. I have some more Decembers now. And I have some Septembers. So that's the time frames I'm looking at, like September through end of the year time frame is it. And if things happen faster, like we've got to cut losses faster, we're fine. We have time that the options will hold some value. And if things happen, sooner, and all of a sudden, we start moving up and we're up massive and want to take some profits, well, then great. I'm going to have all that time on there. So the options will hold some good value. And ideally, they're going to be in the money, and we'll have a good ability to take some profits off and then leave, a couple contracts to ride for, dare we say, the bigger move, right? That's the intention behind things right now. Apple is coming. Amazon, as we speak, is popping up. So Amazon's bouncing. It's now down only 6.5%. Here's Roku. Look at Roku ripping back up. Roku just broke $100. It just pulled back, but it hit 101 as a high. This is nuts. Roku hit 75. You could have potentially got a limit order filled at like $75.10 and then sold that within a half hour at $101. Nuts. What is that? Like a 30% gain? Low to high, it's 35%. Nuts. Range, right? That's insane range. All right, so Apple should be coming out any minute here. Let's see what's going on. What are we going to get? What are we going to get is the question. I would be, I want to say, I would be surprised, but I think it would be funny to see Apple end up just kind of opening up flat tomorrow after all this. All right, here goes Apple. Initial reactions popping up here. Oh, we got a little pop. It's up 1.5%. Let's see. These initial reactions are never, always great to judge off, though. We got to see let's see what the actual numbers come in. They'll take a second, and then they won't always be digested properly because the algorithms that come in and snap this thing up and start, smashing the buy. It's going up a good bit now. It's up 3%. Algos come in, see some good numbers, they smash buy, but all of a sudden under the surface, they could be guiding lower for the next couple of quarters or for next quarter, and then that all of a sudden, boom, this thing will tank. So just be careful, right? That's just how this stuff kind of works. 15-minute chart, we just tapped 170 on Apple. Okay, some of the news is coming in. Oh, looks like we got some beats. This is a good sign if you're bullish. All right, let's refresh this. Apple numbers are now out. Boom, here we go. Apple comes in iPhone Q2 revenue of $50.5 billion versus an estimated 49, so they beat on the iPhone revenue. Okay, cool. Apple Q2 EPS comes in at 1.52 versus an estimated 1.42, so they beat by 10 cents on EPS. Q2 rev, they beat by like 4 billion, 3.5. Look at that. They beat on Q2 revenue, $97.2 billion versus an estimated $93.98. There we go. Look at that. Apple boosts quarterly dividend, 5%. They boosted their dividend. Apple's just coming out and making you feel really good right now if you're a shareholder. Let's see. Boost. Oh, here. This is the news we were talking about earlier. I saw some rumblings of some rumors that Apple was going to authorize a potential $90 billion buyback, and they just did. So this has got to be a pretty killer earnings here. Q2 service revenue comes in just ahead of, they've beat so far in everything. They're increasing their dividend, and they've authorized a $90 billion share buyback. I mean, if you want to talk about good stuff, this is where it's at right now. All right, here we got some more information on Apple. There's a service revenue beat. Q2 Mac revenue, that also beat by a little over a billion. iPad revenue beat as well. Oh my God. Wearables, home accessories did not beat. Unfortunately, I didn't buy. I have had this Apple Watch for too long. I should have bought another one. Sorry. I couldn't contribute. But I guess that didn't beat. So, but barely. And then and who cares, let's be honest, about the wearables and home accessory category at the end of the day of Apple, like really. Okay, popped up. Now it's pulling back a bit. It's up about 1.5% right now. Hit 170. Now it's currently trading at 166, 167. So it's jumping around. All right, let's let this shake out for a few minutes and then we'll see. But Roku's up about 8.5% in the after hours now. Apple's up about 2%. Hey, at the end of the day, like Robinhood's still down 8.5%. At the end of the day, this is not a bad little reaction here. Let's see what the S&P is doing. It's got a bigger weight, so obviously, it doesn't need to move as much to help the market. So yeah, the market's bouncing a little bit here too. You kind of can see that. Look at that little spike on SPY. SPY pops up here to 428. Now it's back here to 426.60. You see how much of an impact Apple's spike has on the S&P because of the 6% weight. So that's that. Let's see if we get some more info. Let's see if we get some more good stuff out of Apple. That's just some of the basic stuff off the surface. Let's see if we can find what the CNBC headlines look. Amazon shares fall on weak sales forecast. Apple posts big beat and a 9% revenue pop. Let's dive into this. Let's see if we get some more info out of here. So EPS, we talked about that. They beat on EPS. They beat on revenue. Okay, cool. Here are all the individuals. Gross margin came in pretty much where they expected. Actually, a slight beat on gross margins. That's cool. Apple did not provide a forecast for the current quarter, and they haven't provided official revenue guidance since February 2020 based on the uncertainty of the pandemic. So that's okay. So that's that. Increase their dividend. All that good stuff. Yeah. They had a successful quarter with switchers, people who previously had an Android phone but decided to buy an iPhone. Interesting. We've had a record level of upgraders during the quarter, we grew switchers strong double digits. Clearly a strong cycle. Okay, cool. So based on this, this is good. It's good stuff. So yeah, interesting. Let's see what Apple. Let's just go back and check on Apple. So now SPY in the after hours is barely even down. Apple's up about 2%. So we were looking at Apple. Apple needs to go over 170 for you to make money on calls, and I think below I forget where it was, 150 something, for you to make money on the puts. So it looks like, based on Apple right now, unless this thing keeps grinding higher in the after hours, which it very well could, unless it does that, it looks like it's going to end up screwing a lot of the call buyers, my guess, and not be up enough for them to make money and screw everybody. That's how it kind of works. They know. Amazon pulling back a little bit here. I would not be surprised if you see Amazon trading tomorrow, between like 28 and 2,700, somewhere in there, just so that you can kind of screw those who had the puts, because you're not down enough. Usually with these massive, like if you miss bad and it's like super bad, this thing will kind of sell off and really kind of dump. But it seems like it's actually holding up decently off the 2,600 level or so on Amazon for now. We'll see if that ends up holding up. But yeah, look at the S&P. S&P is only down 0.2%. So you see how much more of an impact Apple has than Amazon. People are kind of like, screw Amazon. They only have 3.5% weight. Apple's got so much more of a weight, and boom. So S&P is actually floating back up to being flat on the after hours. Let's look at QQQ. My guess is this is down. Yeah, it's down 0.41, but it's actually come back up. So it looks like we'll see how this shapes up. It kind of an interesting earnings, If we had too bad in terms of Apple, Amazon, too bad, we're probably dumping tomorrow. We could obviously dump tomorrow anyway, but too bad would have been nasty for going into tomorrow. We kind of had a good and a bad. So, here we are again, and now we got through another quarter of earnings, and it looks like everyone's going to survive. No one's going to, the sun will rise tomorrow. Bunch of plays there. My 149, 150 put credit spread going to expire worthless tomorrow. Figure it would move up. Apple and Microsoft will make money. Yeah. 150 was a line in the stand. 150 was a line. Yeah, so it looks like it's all kind of shaping up here so far in the after hours. Apple up 2%. I think that if it ends up sitting there, that's that. Roku is only up now 4.5%, 5% now, so it kind of pulled back a little bit. Apple just said supply constraints are significantly lowered from January through March than the December period, so their supply chain constraints were not as bad. There you go. All right. Let's look at some of the breadth. So what does that mean? What are we looking at? That is going to be this right here. Under the surface, what's going on in the market? So look at this. Now, these new lows, I would imagine a lot of these were hit early on in the session. But we saw today 52 stocks hit new highs. almost 1,300 hit new lows. Pretty nasty stuff. Over 6,000 advancers, 2,000 decliners across the overall markets today, which is a pretty nice day. It was a green day, so it makes sense. Tesla still finished red. We have 25% of stocks above the 50-period moving average and about 25, same amount pretty much above the 200-period moving average. They're pretty much at a similar spot. If we get some decent move back to the upside, we're going to see this kind of pushing up in a big way in terms of stocks over their 50 SMA. That number was pushing up towards 50% about a few weeks back, and then now it's obviously come back down as the markets have pulled back a good bit. So under the surface, this is what's going on, and you kind of can see the reality is that, markets are up, but there's still a lot of stocks down towards those new lows. We're skewed down towards those new lows for now until we get a more sustained, I want to say a sustained move or a sustained bounce in the markets. So that's that. TQQQ, everything kind of just, honestly, like a little pullback here, but not that much. So in terms of like SPY and QQQ and stuff for now, SPY is down about 0.3% in the after hours. Not crazy, to be honest. Dumped on the Amazon, bounced on the Aapl, and now it's kind of in between. Unless Aapl really pushes up, I would say up over 3, 4, 5%. You're these are going to kind of cancel each other out to a degree. Unless Amazon dumps under 10% to the downside, they'll probably cancel each other out in a good way. As Amazon's down 9% right now. If Amazon starts flushing under $2,500, my guess is that'll put some more weight on the market, but we'll see. It looks like we'll see where the actual daily candle ends up opening tomorrow, but it looks like Amazon should open up and this inverse head and shoulders should be no longer valid come tomorrow. And here's the left shoulder. This is a very bullish reversal pattern. Here's the head, inverse head, and then here is the right shoulder. Pretty much right in line. That's a very nice pattern right there for a reversal, which we were looking very good. The problem was the curveball was earnings, and obviously how that plays out, and you never know how that can go. So that's what we got. And so that's not going to be valid because right now in the after hours, Amazon is trading at 26.25, which is like right here. So Amazon's going to open up tomorrow. If it were to open up tomorrow down 9%, it would open up right here, breaking below all of these lows, which would then essentially cancel out that pattern. At least the pattern wouldn't work. It could bounce from there, sure, but the pattern would no longer actually be valid. So, whatever. Amazon CFO says inflation added about $2 billion in costs. Not surprised. Not sure what the market is going to do, but I think the thing for tomorrow to watch, and I'd be very interested to see, is the VIX. So what is going to happen on the VIX? Like what's going to happen with UVXY? Let's take a look at UVXY. UVXY is actually down. See, look at this. It's crazy. UVXY, essentially, this goes up when the market goes down, generally speaking. So this actually dumped. This is what I'm interested about, because now that these big earnings are out of the way, like, going forward, let's go look at the earnings account or the earnings or the list. Going forward, like, there's not really going to be a stock in here. Oh, there could be. There's not going to be many stocks in this list that are yet to report earnings that are going to sway the markets in a substantial fashion, unless they have a 50% move, something like that, because their weights are so much smaller, or unless a lot of them have terrible earnings. And what we're seeing right now, so all the tough stuff's behind us. Tesla's behind us. Google's behind us. Amazon, Microsoft, they're all behind us. Nvidia's coming up. I guess it's a bigger weight. Facebook's behind us. A lot of these are Visa's behind us. Like a lot of these are down. These are behind us already. So this is going to be a little bit. My guess is the volatility, because of the what's going to happen. I don't know what to expect. Oh my gosh, I'm freaking out. Like that type of volatility is going to start to really get sucked out of the market. And it's now, okay, what's next? The Fed raising rates. Guess what? Well, we just got a negative GDP print. The Fed's not going to be raising rates at a freaking ridiculous pace, because they're going to destroy they're going to kill the economy, and they're going to send us into a recession. So this is going to have to get walked back, or at least some of the expectations there may start to get walked back as well. So you kind of can see like all the pieces adding to the puzzle here. I'm not very concerned about the next Fed hike. The next Fed hike, most likely it's going to be a half basis point or a 50 basis point hike. Sorry, 0.5%, whatever. But that's what we're looking at for now. So we shall see how that ends up shaping up. Netflix calls look good for June. Let's take a look at Netflix. So, I mean, again, just looking at UVXY, despite the market being a little bit down in the after hours, let's look. SPY here. Here's the S&P. S&P is down about 0.3% in the after hours. So despite SPY being down in the after hours, you would think, oh, UVXY might be perking up. It's actually not, because these earnings are going to get behind us. So it's just something to think about. My guess, I think the SVXY is a really good play. Well, it's under 50 on SVXY. Seems like a good spot for a couple dollar move. This is the inverse volatility. So this goes up when volatility comes down. You can play that. You can play whatever you want to play. But I like that as an idea. Just something to think about on the side. But there's that. Let's look at Netflix really quick. NFLX. Netflix. Boom. Here it is. Yeah, this had a nice little bullish, little reversal day here off the 185. Finished just shy of $200. This could have this has a gap to fill. I don't want to get super excited about, the gaps to fill in here. What I would say with a Netflix type of play, I don't think it's going to be necessarily, it's not done for. They're going to have to innovate. They're going to have to figure things out for sure. I don't think they're going away, So probably my guess on this is that if you were able to buy it, let's say you bought 100 shares, right? The reality of this is that if you were fresh, never bought Netflix before, grab yourself 100 shares and then set some covered calls out into the summer months, at like 250, 225, whatever the price point you want to set it at. Like if you're buying Netflix at $200, if you can get 100 shares, obviously it's a lot of money for some people, and some people it makes no sense. But the concept could be really cool. You grab 100 shares here at sub $200 and you sell a covered call for, let's just look at the prices of these things. You go out to, let's say, August 19th, and you say, I'm going to sell a 225 or a 225 Netflix, covered call, from now until August, a couple months. If this thing goes to 225, not really a big move. It's about a 15% return, about a 13% return. I lock in about a 13% return on my, shares. On top of that, I'm going to get paid today $14, which is $14 a contract, so about $1,400 to do so. So I cash flow $1,400. I can go and reinvest that into something else if I wanted to. Honestly, in this pace, you could cash flow that, reinvest that into a SoFi or a Palantir, buy 100 shares of those, and then sell covered calls on those. And you kind of can see how you can really kind of acquire assets, as they say in the real estate world, right? And build out a really big portfolio of cash flowing, stocks instead of properties. So, that's an idea. You can do that. And if the market, bounces back up and Netflix finishes over 225 by that time frame, well, you just locked in about a 15% return. So, on your money, on whatever that is, what's the math on that? On $200 times 100 shares, it's a lot of money, right? So, $200. I just can't do math on top of my head. $20,000. It's not like a crazy amount of money, but $20,000. You lock in, a nice 15% return. What is that? Times 20K times 0.15, you make $3,000. I mean, you turn your account from 20K into 23,000, in a couple months. It's a pretty darn good return. Obviously if you had a bigger portfolio, retirement portfolio, that's what you can do. And you can live off of something like that, bigger picture, but that's just an idea. So I think it's a nice idea. Yeah. Nice mic. Yeah, this thing was an expensive piece, I guess. But I feel like from all I have seen with this mic, it's been a good investment, I guess. It's been pretty good quality and it's easy to stand, works pretty easily. So no complaints on the mic. But that said, I'm going to try to wrap things up here, guys. Hopefully that was helpful. We dived into a bunch of the earnings. Talked about, if you want to go back to the beginning of the stream, we talked about a lot of sentiment, talked about some stuff that we're looking at, other stocks and positioning and stuff like that. Hopefully it was helpful. Again, S&P as we speak right now is sitting at 0.43 in the red. Not too bad. Let's see what Apple's doing. AAPL. Now I'm getting a little lag on Weeble. AAPL Netflix. I jumped over to Netflix. Aapl. Give me Aapl, please. Aapl is sitting here at actually only up about 1% in the after hours. It was a pretty good earnings report. We'll see how this ends up shaking out. Amazon seemingly was a pretty nasty number. Amazon with some nasty numbers, which Amazon's down about 9.5%. So Amazon's the bigger weight to the downside than Apple, obviously, for now. But Apple has the bigger weight in the S&P and the NASDAQ. So, they're kind of balancing each other out. Not really, because Amazon's down so much more. If Amazon's numbers were not as bad, I think this would be the market wouldn't really be reacting very much to this. But we got a little bit of a reaction to the downside for now. We got a little bit of both ways. The good news is for the overall market is that you got a split here. One was good, one was bad. The bad news is that we had one. Amazon significantly down. It's down 10% roughly. So I guess if you want to play it that way, I think this could be in my opinion, Amazon's a great longer term play. In my opinion, this could be a really good opportunity to start, if you have never picked anything up, to start maybe looking at picking something up Amazon wise, fractional shares, whatever you want to do. It wouldn't be a bad idea, in my opinion. I think it's setting up for, this could be one that you don't have to worry about long term. Dipped from here, anything that goes lower, then just, snag some more. I don't think Amazon's going anywhere long term, right? So peace out. Thanks so much for watching. Thumbs up button, consider subscribing if you're new, all that good stuff. Links, resources down below. Check them out if you want to. If you don't. We'll do another live tomorrow afternoon to wrap things up like usual. We usually do lives Monday, Wednesday, Friday for Power Hour. With earnings, we just figured that it was easier to just do lives again this week. So that's what we did. That's the plan. And I will see you guys in the next one. Peace out.